is the responsibility which we receive here. Because as the authority increases, responsibility, onus is also increased. So the expectations of the government, expectations of the regulatories is very high. That's why there is always a debate that what is the role of auditor? Whether the role of auditor is limited to the verifications based on sample, whether the role of auditor is not limited to verification, and then is it a watchdog or bloodhound? I think that's the very important terminology which is used. Whether auditor is a term as a watchdog or a bloodhound, and possibly, I think if I just look at the expectation level, from expectation level, the role has actually moved from watchdog to bloodhound. Even though theoretically we may mention that we are just a watchdog and we are not expected to unearth something which is a fraud. However, when you look at the expectations of the auditor, regulators, investors, stakeholders, they believe that as auditors, we should be aware about what is happening within the company. And a statutory auditor is something auditors who are the next external party who is having a more access to the accounts, and then the expectation is very high. So the focus is on accounting standards, and this focus has been started with the main objective that the announcement issued by ICI dated 31st March 2021. So what I'm going to cover during this session, first I'm going to cover on the announcement issued by ICI dated 31st March 2021. Second, we are going to cover is on applicability of accounting standards. What announcement talks about, to whom the accounting standards are applicable, with a partnership firm, small, medium, large, then how this is applicable. Next, we are going to cover on is there any exemptions or restrictions for a small firm or for medium or large size. That we are going to discuss later on. Next, I also covered certain frequently asked questions, and I would try to have an interaction debate throughout this session, because it's really a pleasure to interact with a small group of persons, and we all feel as a part of one team, one profession. So let's have more interaction, more discussion, because the objective of being a part of these 2 hours the study circle is achieved only when we get the knowledge out of this and we are able to apply that into a practice. That is possible only when we have more interactions. Covering more and high number of items is not a critical thing. However, ensuring that whatever we cover should be able to really understand and take it forward. So we are going to take frequently asked questions and have more interaction on that aspects. Next, as time permits, I'm going to also discuss about commonly observed errors in accounting standards. So this is a broad agenda of today's session, and I request each one of you to be really focused. Why I'm saying focus, because had this been the physical one, I can know, I'm able to have more eye contact with each one of you. I'm able to have more interactive things. However, when we are virtually sitting, it is really a boon for all of us. Why? Because everybody is sitting at different areas, maybe a home, office, at your locations. But the most important thing is that let us try to have more focus attentive, because you are able to save many hours because of the virtual. But however, the objective is only when we are more attentive towards the purpose. Let us first understand about the announcement issued by ICI dated 31st March 2021. First point which was being discussed here was the applicability of accounting standards to non-company entities. Technically, the word which was used earlier was non-corporate, and then non-corporate has been changed to a non-company. So means anything other than a company, that is what is called non-companies. So the announcement has been issued by ICI dated 31st March. However, please ensure that this is not the new announcement for the first time. Please understand that there is only a revision in criteria or classification for the purpose of accounting standard applicability. Accounting standards were applicable earlier also. It is not the new requirement. Even last year they were applicable, but the classification, the criteria for classification has been modified. Let us look at the classification. Classification of non-competent entities are primarily now divided into 4 levels: level 1 to level 4. If I just compare to earlier classification, there were 3 levels. Level 1 is always large size, and then there were level 2 and level 3, that is small and medium. How the objective of ICAI was to align the classification in line with the MSME, which is a coined word which is used across the board. So that's why the micro, small, medium, MSME, that is a coined word. That's why there are 4 levels now for classification of non-company entities. Level 1 is large, then level 4 is micro, level 3 is small, and level 2 is a medium size entities. So this is where the NCE are being classified into 4 levels. And one very important thing for all of us to understand is that it is applicable from accounting period commencing on or after 1st April 2020. So for financial year 2020-21, for which we all are going to audit, for that particular period, this announcement is applicable. Generally, what happens that once the announcement is issued, subsequently this is applicable. For example, on 31st March 2021, the announcement was issued. So ideally, it should be effective from 1st April 21. However, as I mentioned earlier, that this is not the new applicability. This is actually relaxation from the old announcement to the new one. So the relaxation has been provided retrospectively from the period 2021. So the objective or focus during this particular session is on this announcement, how the entities are classified into level 1, 2, 3, 4, which accounting standards is applicable, where is some exemptions. This all has been appropriately being addressed in this presentation. During my session, if you have any questions, please feel free to write in chat box, and I will be more than happy to respond to your questions during the session itself, so that we can have interaction also. And your question will also help me to learn many things which I may have missed out. Now let us understand first level 1 entities. Non-company entities which fall in any one or more of the following categories at the end of relevant accounting period. So first point which we need to understand is that it is n to any one or more. So if an entity is falling in either of these 5 categories, 1 or 2 or 3 or 4 or 5, that is a level 1. First 2 are by nature itself, we will all understand that they are always a level 1. Level 1 is a large size. So it says listed or in the process of listing. They both are covered here. And it covers what listed? Securities. That is, includes shares, debentures, or any kind of securities. So they are listed or in the process of listing. Hemachandra ji. Hemchandra ji, Chitra ji, please mute yourself. Okay.
Sir, Chintan sir.
Ha.
Sir, in the presentation, there are some rectangle box coming in front of us. So can you please remove the same thing?
Rectangle boxes, very rectangle boxes.
It's coming in front of me actually. I don't know why.
Rectangle boxes.
Yeah, means in the screen and in the presentation only.
Read, you say read things?
Just a moment. There are it can be annotation actually from a presentation. Annotation mark.
You are saying read.
Yeah, it's one remove now.
Sorry.
हो गया, वो इशू क्लियर हो गया है, जो पैच आ रहा था ना वो हो गया, क्लियर हो गया.
Okay, fine.
Okay. I hope anything required from my side, Nitin ji?
Nothing, sir. Nothing.
Nothing, sir. Nothing.
You can continue.
Okay, fine, sure. So let us look at that. If any entity falls in any one or more of the following categories, in that case, it is a level 1 large size entities. So first, as I discussed, is securities, which includes the shares, debentures, or any kind of securities. If they are listed or in the process of listing on any stock exchange, please mention here that it is on any stock exchange. Means that it can be listed or the listing on BSE, NSE, multi-commodity exchange, SME listing, whether in India or outside India. So all kind of situations they are covered, and any securities if listed or in the listing, that is always a level 1. Then comes banks, financial institutions, insurance business. They are always a large size. Then comes turnover. There are two criteria which are repeated in level 2 and 3. That is turnover and borrowings. The turnover excluding other income exceeds rupees 250 crore, and in the immediately preceding accounting year, this point to be noted here. If we are talking about for the audit for financial year 2020-21, comparative or immediately preceding year is a 1920. So you need to look at the turnover of 1920 to decide the applicability of the level. Is it level 1, 2, 3, or 4? That will be decided based on a 1920 turnover, not based on 2021 turnover. The borrowings which are in excess of rupees 50 crore at any time during the immediately preceding accounting, again same thing, they are just looking at the 1920 turnover, 1920 borrowing outstanding at any time in excess of rupees 50 crore, and then holding or subsidiary of any of the above. I think that is what is basically primary on level 1. Come to the next part is on level 2. Level 2, as I discussed, is a medium size entities which is not falling on a large size entities, and then the focus is mainly on basically turnover and borrowing, where turnover exceeds rupees 50 crore but does not exceed rupees 250 crore. So earlier we talked about 250 crore plus, now we are talking about 50 to 250 crore, and the borrowing is again 10 crore to 50 crore in the immediately preceding year. And then comes a holding or a subsidiary of any one of the above. So that is a level 2, and now coming to level 3. Under level 3, as again the definition is turnover or borrowing. Last point, holding subsidiary, is what we need to understand again. For example, if there's a proprietorship firm having turnover of 200 crore rupees, and the partnership firm where proprietor is having a more than 50% stake, which is called subsidiary, and the partnership firm turnover is just 10 crore rupees. In that case, partnership firm is a subsidiary of a proprietorship firm, and then the partnership firm will need to be called as a level 1, level 2. That is a 200 crore turnover, not a level 3 or 4. So holding subsidiary of any of the above in everywhere is always a part of the higher level to which it pertains. So level 3 is concerned, turnover is now between 10 to 50 crore and borrowing is between 2 crore to 10 crore. And comes last point is on level 4. Level 4 entities is a residual group. So first we discuss about level 1, the large side entities. Then we talk about level 2. Under level 1, there are two things which are very, very common, that is listed on the listing: banking, insurance, financial institutions. For level 2, level 3, level 4, we need to look at just two criteria. That is one, borrowing, and second thing is on the turnover. And everywhere it is says the holding or subsidiary of the above are always part of that. And any one of the above to be considered for the purpose of understanding to which level this non-completed falls.